is it still a good opportunity to invest in rental properties based on what's happening?
Well, let's go into that question talking about what's important. Okay. The same reasons why you should have been investing in rental properties played 2 years ago, right? Before the market jumped, 20% and 20% in 2 years, right? That same level of thinking played 17 years ago when I started to invest, even before the market went down 35%. And the same answer I'm going to give you, if you're believing in this for the long haul, is the same today, right? Today is a great time to invest, not because of what's happening today in real estate, but because over a full market cycle, real estate performs better than alternative asset classes and has more consistency. So I'm going to answer this for the short run as well, but I just want you all to get really comfortable that when we're talking about whether or not it's a good decision to invest in real estate, Pablo, let's talk about your 3 properties that you now own, right? The first one you bought a year and a half ago? Year and a half ago,
yeah.
Right? Remember when you were buying that property? And then, over the last year, we did your portfolio review and we talked about how much appreciation you've received over that property. Do you remember me saying, hey, Pablo, I love that you have jumped out of the gates with this appreciation, but I know you're buying and holding for a full market cycle.
Correct.
So what I fully expect is that at the end of 20 years, we're going to look back and you're going to receive roughly 4.5% appreciation per year, year over year. So you're starting out with 20 in the first year, but that's the way this thing works, right? You're going to come back to about 4.5% appreciation year over year over year. And so I don't get too excited about, is it the right time to buy today? Is it the right time to buy tomorrow? Is it the right time to buy 20 years ago? It's because that's part of the reason why I love this asset class. You buy, you hold. This is the way real estate cycles work, and you benefit from all 5 profit centers. Now, I will say that a year ago, I said, this is the best time to invest because that's the only time that I've seen debt at 3%.
Yeah,
that's the only time. I mean, I've talked about it and I said, the deal is the debt, the deal is the debt, the deal is the debt. I never have ever seen interest rates that low. And so I stand fully behind that. That was an incredible time because we also saw home prices going up. But every other time is the same for me, right? It's still a good time to invest.
Let's take the snapshot of these next 3 months versus sitting on the side, either keeping my money where it is right now, or I just came across some new money and so I put it somewhere, right? Talk to me about that.
So I think we need to challenge ourselves to look beyond just one asset class. I think as not your average investors, we are all going to do better if we're considering how this asset class that you're thinking about buying right now is compared to what's going on outside of it. And so to answer your question, why right now, is it the right time to invest or not, is frankly, if you're not putting it in rental properties right now, I don't know where you're putting your money that you're confident in the short run, in the long run, in any run. Right now, investors are incredibly scared. We talked about this on the client only call and on the Not Your Average Investor show about 6 weeks ago or so, maybe 4 weeks ago or so. And we talked about how there was going to be some pain in the stock market that was coming. The market was only down about 13% at that time. Now the market's down 23%, right? That pain continues to happen. And if you think about what was happening when it was down 13%, there was still some hope of where that the Fed was going to be able to pull this into a soft landing, which means tamping down inflation, but not sending us into a recession. You talk to 10 people on the street right now and you ask them if we're in a recession, and 10 people are going to tell you, yeah, we're either in a recession right now or it's going to happen and it's going to be painful. So the hope of pulling this thing softly is really evaporated over the last few weeks, mainly because inflation numbers continue to be high. And so now the Fed is on an all-out war to tamp down inflation, which they should be because it's eroding all of our wealth, and that's great, but they don't even care now about sending us into a recession because we are forced to be here. We are forced to choose between going into recession or tamping down inflation, and they're choosing to do whatever they can to tamp down inflation. That's why you just saw a 0.75% interest rate hike from the Fed, and that was the largest in 28 years at one time. And they're saying there's going to be 5-6 other hikes this year that might be a 0.5 point, 0.75 of a point. Normally, they only do this a 0.25 point at a time. They're throwing everything there. So how this relates to the stock market doesn't do well in recessions, right? So we're down 23% in the S&P 500 right now. There's probably going to be more pain. So if you're thinking about where to put your money, right, there's the real estate option, which we can talk about, right? I'm not putting it in the stock market right now. The PE ratio for the S&P 500 is still 18 right now. For those who aren't really familiar with that, 13 to 15 has been historically normal. So if it's above 15, that means that what it's telling you is that the stock market is still overvalued. And we're down 23%. I'm personally not going to put my money back in the stock market until it's below 13 to 15. Okay. So I think if you put your money there, you're just trying to get out of there to preserve your capital. I'm not putting my money in the stock market. So where are we thinking about putting our money? If it's not the stock market, where should we look at?
Lily Bishop asked about gold.
Just gold. I'm not an expert in gold investing. Let me just put that out there. I just know that it heads against inflation, right? It's a safe haven. So when you're in recessionary times, you would expect gold to do well. So I can see gold doing well, right, over the short run here. But then I compare that to rental property investing. And while gold should do well, rental property investing should do better in almost every single category, in my opinion, right? Especially if you have a vertically integrated provider that makes it passive and easy for you, right? In gold, you don't get cash flow. In rental properties, you get cash flow, right? And rental properties, when home prices go up so much and interest rates go up so much, which is what we're seeing and what we expect, that becomes an affordability issue and people can't buy homes anymore. What do they turn into, Pablo?
Renters.
They turn into renters. Yeah. So this is more demand for your rental properties, which should see increased rent prices going up. So you have that as in the short run and the long run going for you for rental properties. Long run, I don't like, what do they say? Don't fight the Fed. If the Fed's got an all-out war on fighting inflation and bringing inflation down and creating more of a better economy at some point, like they are throwing everything at it to turn this thing around as quickly as they can. The long-term prospects of gold don't seem great to me because you're fighting the Fed, right? The Fed wants the economy to do great. They're putting everything they can to it. They're going to figure it out because they control the world's money. So in the short run, I would see gold doing pretty well. But in the long run, I would really question it. You're kind of fighting the Fed there. You got better upside in rental properties than gold. Gold, you're pretty limited in upside, especially if you use smart debt in rental properties. You got much more of an upside, or some other notes that I made. It's just risk mitigation.
Crypto?
Oh, now we're moving to crypto. Yeah. So I think, well, just to kind of put the button on the gold thing, right? I think it makes sense, right? And maybe put some of your money in gold. But if you're looking at rental properties versus gold, I don't see how gold wins.
How does gold rental properties compare to bonds?
Well, bonds is the safe haven, right? Okay. So bonds is the more conservative play. And you kind of see that in your returns on investment as well for bonds. Yeah. So right now, so this is what's going on in the bond world, right? So interest rates are up from the Fed, right? They're pushing interest rates up. That means that your yields on your bonds, right? Bonds are a debt instrument. They just pay you a coupon or they just pay you basically interest payments, right? So your yields are going up. That's a great thing. But the problem is they started at like next to nothing. So going up doesn't really mean all that much, right? So I just looked it up yesterday, actually. So your short-term bonds, like your T-bills, which typically mature in a year or less, you're still earning like 1%, maybe 2% on your money, right? And that's like you're earning 1 or 2%, you're putting your money away and you're earning 1 or 2%. And inflation is 8.6% according to CPI right now. So to me, it's like, you're just hoping not to lose all that much. That's what you're betting on bonds right now, right? If you're going to go outside of the government bonds, right, then you might get 4%, 5%. You're still losing until inflation comes down. So a lot of financial advisors, I was just talking with a friend of mine, I was asking him, what's he doing with his investors' money? And he said, I'm putting them in short-term bonds right now. And I'm waiting until this thing gets corrected so I can preserve their capital. I'm waiting until the economy corrects itself. We get inflation down. And then I want to have powder ready to go out and buy undervalued stocks for them or whatnot. And I said, that strategy makes sense. However, right, short-term bonds pay like next to nothing. Right? They pay 1% or 2%, right? How long is it going to take for this to get turned around? I don't know. A year, 2 years, 3 years. I'm not sure. Right. You're losing a lot over that time period. You could put that money into a rental property and earn 11% on your money instead of just earning 1%. Right. Times 3 years. Right. So bonds, I don't see how bonds win. To me, that makes the least sense out of, well, stocks make the least sense to me. Bonds make a close second least sense to me. Gold, you could certainly make an argument for. Bitcoin, Crypto? I'm not touching that. I don't know when the bottom is. I mean, Bitcoin's dropped what, 60% since its high?
Yeah.
I mean, so what you're seeing there is an asset that lacks utility. I don't know what the bottom is because there's no utility there. We don't know what the utility is. In rental properties, we talk about how you're investing in a critical need, right? Shelter, right? The government needs it to work. You need it to work to keep a roof over your head, right? Those are critical needs. Those are utility. Crypto, I'm not touching because that is absolutely going to the gambling table. And when you're on a bad streak in craps, are you putting all your money in when you're on a bad streak in craps? No, that's kind of how I feel about crypto right now. And a lot of people feel that way, of course.